Hi guys, this video will be about how to make money online with trading. So basically like how to start the trading, right? So now let's see about the trading, how to start trading. So there are different aspects of trading. Traders, we have scalpers, we have intraday traders, we have string traders, and there are position traders as well. But I'm just going to teach you on the basic way to analyze the chart, and you can actually use it in any financial market, right? So there are different type of financial markets. Financial markets, instruments, financial markets you can trade. So examples of that, e.g. of that are, I know majority knows about Forex. There is Forex, you can trade stocks, you can trade crypto, you can trade futures, and many more. You can trade synthetic. There are a lot of financial markets you can trade on, guys, and I'm going to teach you like a basic way to analyze it to at least make money on any financial market. So as long as you know price action, market structure, you can basically analyze any financial market. It's all the same thing most of the time. It just depends on how it moves. Some are volatile than the other. Everything just depends on how it moves. So I'm just going to teach you like basic way of actually start trading, and you can always amplify to that. So this is just a simple way on how to start trading for beginners. So like I said, you don't have to do Forex. You can do stocks. You don't have to do stocks. You can do crypto. What I'm going to teach right now basically works in any financial market. As long as the financial market has a chart, you can actually use what I am teaching you right now to start trading and start making money online with trading. So now I'm going to do Forex because I trade Forex. And I trade crypto too once in a while, but I'm more into Forex. So I'm gonna use EU, which is Euro USD, to do the sample of how to start trading. So for me personally, I like top-down analysis. Just for beginners that don't know what top-down analysis is, top-down analysis when trading. And that means that going into multiple time frames just to look at the overall picture of the market using multiple time frames to be able to have higher probability of what we are looking for overall. That is what top-down analysis is. And I'm just going to do how I analyze with top-down analysis and just beginner-friendly way. It's not that difficult. You just have to master it. And the more you practice, you'll be able to know how to do it. So first of all, what I do is I do top-down analysis. That is how I start, meaning I go from a higher time frame to a lower time frame. So that would depend on the kind of trader you are. Just like I mentioned at the beginning, I said they are scalpers. Scalper means they just want to take few pips out of the market and move on. Some of them trade in like a 1 minute time frame. Some of them trade in like 5 minute time frame and they are out of it, right? But I'm more of an intraday trader, right? And an intraday trader, most of the time I like to go for my top-down analysis. Okay, for an intraday trader, top-down analysis, what I like to go to is I like to go to daily time frame. Then I check the 4 hours time frame. I check the 1 hour time frame. I take my trade my trade off of the 15-minute or 30-minute, and sometimes I actually go to the 5-minute time frame depending on how I'm seeing it, because sometimes you see a clearer picture at 5-minute time frame to be able to enter clearly. That is how I see it sometimes. So because we know that the market changes and the market is so different, sometimes I see a clearer picture at the 15-minute time frame, then I will take my trade there. If I see a clearer picture at 30-minute time frame, then I will definitely take my trade there. And sometimes I actually see a clearer picture for entry at the 5-minute time frame, so I take my trade around that time frame. So those are top down analysis, guys. I use the bigger time frame to analyze the overall market of the overall action or direction of the market. Then I use the smaller time frame like the 15-minute, 30-minute or 5-minute to actually take my trade. So that is how I do as an intraday trader. For a scalper, like I mentioned, some of them just go to the 1 hour, 30 minutes. They don't even go to 30 minutes. I think 1 hour, 15 minutes, and they take their trade off of either 1 minute or 5-minute time frame. For a swing trader can go for like 1 month to 1 month time frame to a daily time frame to like 4 hours time frame. Majority of the time, swing traders takes their trade off of the 4 hour time frame. But I am an intraday trader, so this is how I like to do my top down analysis. But like I said, I am going to teach you like the basic way of trading, and you can actually use it at any instrument, financial instrument, like I mentioned, or you can actually use the same thing as a scalper, as a day trader, or as a swing trader. You can actually use this method. It's just the time frame that matters on how you take the trade. So for a swing trader, they like to take their trades off of the 4 hours time frame. So you can still use the simple strategy as well, but you just be waiting for a 4 hour candle to be able to take your trade. And if you are doing an intraday trader, you can still use the same strategy, and you will be just be taking your trade off of the 15-minute or the 30-minute time frame. And like I said as well, if you're a swing trader as well, you just be taking off your trade off of a 1-minute time frame, 2-minute time frame, or 5-minute time frame. But you can still use this strategy, and this is how this is the reason why we have to go with market structure and price actions. As long as your trade involves around market structure and price action, the analysis, you can actually use it for any time frame, any financial markets, to be honest. So now let's go and see how I start my trade. So now let's start on how I like to do it. First of all, what I like to do first of all is draw my trend line. So that is how I first start to do based on the top down analysis. I like to draw my trend line because trend line to me just simplifies the market and make it easier to see the market bit by bit. So I like to do trend line from one time frame to another time frame. I like to do support and resistance as well. Support and resistance as well. I like to do that as well. That also simplifies the market for me. So now let's start. If you're not familiar, okay, the platform I am using is called TradingView. For those that are not familiar with that, or they are really a beginner and they don't really know much about trading, they don't really know much about trading, this is a video for you. I'm actually doing the video for like beginners that does not really know much, but even those that have been trading as well can pick 1 or 2 things from what I trade. No knowledge is wasted. So this platform right here, in case you don't know, it's called TradingView. And if you want to know how to use TradingView, I have a video already dedicated to how to use TradingView, right? So you can go there and look for the video and see how just to navigate how TradingView works. I have a video for that, so you can go through that. So now what I do first is draw my trend line. So I put a trend line, just a beginner friendly. We know trend line has to have 2 points. You can't just draw trend line like this, just from this 1 point right here. This is wrong way to draw trend line. So for trend line, you need 2 points or more for trend line. So before you can draw a trend line, you'll have to make sure that at least you have 2 points to draw your trend line. And to me, there's no wrong way to draw a trend line. Like I said, I respect people. I believe everything works. As long as it works for you, that is fine. Some people actually like to draw their trend line off the body of a candlestick, meaning something like this, something like this. Let's see. From here to here like this. They like to draw their candlestick. You can see that right here the wick is not short. Yeah, they're not taking the wick, they're drawing their candlestick of the body, but I prefer drawing my candlestick from the wick. Like I said, anything that works for you, it's fine. This is how I prefer it. As long as it works for you, you do whatever works for you. So I like to draw my candlestick from wick point like this. You can see this is a valid trend line because it touches 2 points, because it touches 2 points. So that is a valid trend line right there. So now let's see. Now that I see it like this is how I like to analyze. I can still draw more trend line. Like I said, trend line just makes it easier to navigate and breaks down the market for you. Right now, I can still draw trend line. This trend line is valid because, so don't mind that it actually break the structure right here. It's okay because it's still valid. We have thought here, we have thought here, we have thought here. So even the fact that it's breaking this right here is still really valid, to be honest, because we can testify that we have multiple touches around that area. So that is valid right here. So that's one thing I see. Now what I'm going to do now is my current price. I'm going to draw another trend line from one point to another. So as you can see right now, that based on just drawing trend line right here, it simplifies things way more different, and I'm going to explain why. Before drawing the trend line, I knew it, we all knew it was a downtrend, but we don't have enough confluences to see how downtrend it is. But now that we draw a trend line, we can see right now that this particular right here is drawing a trend line to the downside, which shows is a down move. We can see this trend line right here shows there's this break of structure coming back to retest that structure and going back to the downside. So the trend line just makes it easier for you to simplify your trades, and it gives you like a clearer vision. That is why I like to draw trend line. And the more trend line you draw, the easier it just makes it. Is it always accurate? Absolutely not. Just like this one right here, right? We can see this one that it went up as well, broke this trend line here, and it's continuing to push up. Majority of us will think, oh, because it broke the trend line, we're going to push to the upside. But what happens? We just continue to push to the downside. That is why we need confluences when trading the market. You can't just decide on one thing that, oh, okay, I'm just going to see when it touches this trend line, I will move on. No, you need confluences. Like me, I like to use trend line as confluence. I like to use zones, which are like key levels, as confluence. I like to use my Fibonacci as confluence. I like to use my chart pattern as confluence. I like to use my candlestick pattern as confluence. So these are like things that can make you have more higher probability in the market, because you're not just using one certain thing to do things. You are using, oh, my trend line is here, is hitting my trend line, is touching a key zone, it's touching a retracement level of a fib. I can see a chart pattern, I can see a candlestick forming. So the more confluences you have just shows a higher chance of that probability happening. So that is why you just don't use just one thing to do. But I'm just gonna do this in a simplified way, just so for beginners that are not used to trading. This is just simplified ways. Like I said, we just have to start somewhere, then as time goes on you can always add things to it, but just make sure that everything works. And when it comes to trading, simplicity is the key. Simplicity is the key in trading. Just make it as simple as you can make it, and I promise you it works. Simplicity is really good in trading. So just make it as simple as you can make it, like I said. So now let's go to another right now. Now that I'm seeing this, the next thing in my head right now is drawing a key zone. Drawing a key zone. And if you watch my previous analysis, I think I've explained a little bit about key zones, on how to draw on how to start drawing things on TradingView. I touch a bit about it, key levels, but right now I'm going to touch a bit about it because, like I said, everything comprises of each other. So now, after drawing my trend line, what I personally do is now starting to draw a key zone. And how do I draw a key zone? So now let's draw a key zone. How do we find a key zone? How personally makes it easier for me to find a key zone is, to find a key zone, you have to look for a zone that has been rejected off multiple times. So key zone, how to find a key zone. To find a key zone, look for the zones that has been rejected off multiple times. So looking for a key zone that has been rejected, a zone that has been rejected multiple times, just make it a little bit more easy, that you won't have a lot of zones, because some people get that so confused, and based on, because they are looking for zone, they draw a lot of zones, and it just make it more harder to see, it make it more complicated to see. So if you can just draw key zones, on like zones that have multiple rejections of meaning that whenever we get to this particular area, we have seen, based on the prior price action, that they have multiple rejections around that area. Those are valid key zones, and that is what you look for. So that just make it easier for you not to be able to look for key zone, not to draw so many zones on your chart, and just make your chart rough and more difficult to see. So now let me give you an example of one key, how I draw key zones right here. You can see right around this area. Let's go to the top. This is the last, based on this chart right here, this is the highest we have been to right here. But I'm not going to use a zone here, to be honest. I'm going to use a real line here, because I like to use my charts. I like to draw my chart as simple as I can draw it. And that is because I did not see multiple rejections off of this area right here. But it's a key point to notice that this is the highest we have been so far. Highest we have gone to on Euro USD. This is the highest we have ever been to. So it's okay for me to put a real line right here. That is what I would do instead of using a zone. And I'm not using a zone at that area because of there is no multiple rejections around that area yet. So just to make my charts clean, I'll rather just use a zone, a line right there. So now let's see what's next, right? What next is, I can use a zone right here. I'm seeing multiple rejections around. Whenever we get to this area right here, we are seeing multiple rejections. So a zone is valid around that area for me, just to make it a little bit see. So what did I mean by multiple rejection? First of all, what I mean by multiple rejection, we can see this year, when we got to this year, we rejected, we came up. We went back to the same zone, we rejected, we came up. We went back to that same zone, we rejected, then we came down again. This right here makes the zone significant because of multiple rejections. Not just all. Let's continue. We can see there's another move right here. We got to that move. What happened? We rejected and we went down again. We actually broke the zone. We came back down to get the zone. We are seeing rejections around that zone. It wasn't solidified enough. We went back again. We reject, even beside the fact that we reject a little bit more above the zone, but it was still rejecting. We came back down again. What happens around this area right here? We rejected around that zone. This is the only thing that makes sense, that is a little bit high, that we might think, oh, let's see, it broke the zone, then we might continue to push to the down upside. But this will be for another later video. That is why we use more confluences, because some people, as soon as it breaks the zone, they just believe it goes to the upside. Look at how it is right now. It broke the zone, but it still pushed to the downside. That is why we wait for confluences. I'm going to divert a little bit. Now, before you take a trade like this, that have been having multiple rejection off of it, we broke the trade, we have to wait for a retest. And a retest meaning I want a comeback to, just like how this came back, reject around that area and give me like an engulfing candle or something around that area to show that the bulls are now in the market, so we can now continue to push to the upside. But we can see that even after the zone was broken, it came down again. It did not give us any buy momentum, and that is the reason why we didn't continue to push to the upside. Then we still continue to push to the downside. But I know that might be a little bit confusing for those that are new to trading, but I'm going to do a later video and explain more of like a retest and everything. So we can see right around this area right here to the same zone as a rejection. So those are like a very good key area of zone for you to draw a trend line, meaning there's a possibility based on the parallel price action that whenever we get to the zone, there might be a rejection. That is how you'll find a key zone, a good key zone. That is how you find it. You look for a certain particular place that I've been rejecting off of, and we can see support around there and we can see resistance around there. So I did a video on support and resistance. I think it was a short or something. For those that does not understand what support and resistance is and you haven't watched the video, I'm just going to repeat myself here. So there's something we call a support and resistance. For those that doesn't know, that are beginners, so just remember that anything that has to do with support is just like a key zone. There are key zones, so it's just like a key zones for like the ceiling and the down. So when it comes to support is the floor and resistance is the ceiling. That is how I remembered it, because when I first started, it was a little bit confusing for me on how I differentiate what support and resistance is. So just remember your support is down and your resistance is up. So of your key zones. So now let's draw another chart. So now that we can see, based on this example I gave you right here, this analysis I mean that I gave you, this is the upper part, upper zone. Even though if I did not use a line, it's still a zone, upper zone. And like I said, the upper zone is resistance. So based on these two zones, this first zone right here, zone 1 and zone 2, this first one here is the upper one. So the upper one is called resistance or called the ceiling. This second zone right here is called support, or you can call it the floor. That is how I was able to understand it. So maybe you can actually maybe to pick that up to understand it based on that. That is called support and resistance. So right now we are seeing the support and resistance right here. So now let's go to another one. Now we are looking at the chart and see, can I still draw more zone? Because we can see right now I've drawn one zone already. Can I still draw more zone? Absolutely. Like I said, just look for key areas and don't just draw zone everywhere. Look for key areas before you draw zone. Now let's look. I can see a zone here too. There is a zone here too. Let me make that short. So now I draw a key zone right here. Just like the previous reason why I said, why do I draw a key zone here? We can see parallel price action. There is a rejection here, a rejection here, a rejection here, a rejection here. These rejections right here was a support. And this rejection right here becomes a resistance. I hope that is not confusing because the last one I did was separate. Like the upper one was a resistance and the lower one was a support. And it's still practically the same thing as this one, right? So what makes it solidify as well is because one key zone has multiple supports. This is the support here. And we have resistance as well on a key zone, on one key zone. So this is one key zone. We can see rejection from this downside here and rejection from this upside here. So that makes a solid key zone as well. I really hope what I just said right now did not confuse someone that are really new to trading, but those are the ways you look for key zones and makes it more signify like more important and more sensitive, because we can see that particular key zone has multiple supports, rejections, and kind of multiple support resistance as well. So that's a key zone that you can also draw around that area. So that is how I basically trade most of the time, guys. Can we still draw key zones right here? Because we're having, this is the last one based on this current price action. I'm just going to draw a real line here, just so that it won't be too crowded, right? That is basically how I do. Right now, what will I have done here, to be honest? I won't have, you can also still draw a zone here if you choose to, right here. Just draw a mini zone right here, just to see how that goes, right? We can see right around this area right here, because this zones has always been significant, like 3 touch. We have this close of candlestick around the zone. Now it's coming back to retest. All I need to do is you have to wait for a good confirmation retest, meaning I have to see maybe something more weak rejections around that zone, showing me that it's not going to break that zone. Then I see like an engulfing candle, meaning the bull markets are present around the zone. Then that's a higher chance that we're going to continue to push the upside. That is not a fake out. But if it's a fake out, you won't see something like I said. Even despite the fact that we closed around the zone, you will still see a candlestick, a bearish candlestick, possible close around this down move. So that means this particular one is a fake out, not a breakout. I hope that is not confusing, guys. Then that will show me that even despite the fact that we broke that zone, we are not pushing to the upside. We are still pushing to the downside. And to me, that is one of the importance of being patient and getting retested. If you look for retracements and retests, it's really easier because it makes you take out, it filters those that are fake out and those that are actually breakouts for you. I know it might be a little bit confusing for those that does not really know much about trading, but just practice makes perfect. I was once so confused as well, but the more I practice, I was able to gain more knowledge, and I'm still gaining more knowledge. So I'm really hoping what I'm explaining right now, I'm trying to make it as simple as I can, and I'm really hoping that is how it's coming out to whoever is watching this that is new. I hope it's really so simple for you to understand how I'm explaining it, because I'm doing my best to explain, to break it down as simple as I can. So now, guys, since I've drawn this key zone, what next am I looking for? I'm going to go to a more smaller time frame to see if I can practically draw anything on the smaller time frame, and that is how I simplified the market. We can see around here that we are still seeing the same thing, right? I can genuinely still draw a trend line here if you wish to. This is valid right here. One trend line from one point here to another point here is valid. Like I said, like drawing trend lines just simplifies the market for you. We can see that this can even still make it feel like a fake out right here, just like how I explained at a bigger time frame, because we can see there is this trend line right here, and I just see this currently as possible seeing like an impulse, a retracement around that trend line, seeing retracement, and we might possibly continue to push to the downside despite the fact that this zone was broken. So that is why I'm going to repeat myself again. Confluences is key to the market. The more confluences you see. So even because I have a trend line here, won't make me go for a buy around this area right here, because I know it might just be like a retest of a trend line, before we now continue to now push to the downside. So that is why it's important to do top-down analysis, in my own opinion, and it's important to have confluences as much as you can before you have trade. Now that I'm in a 1 month time frame right now, what next? I'm going to go to a smaller time frame, which is the weekly time frame. See what else can I do around this area right here, just to simplify this current price action. I can still draw a trend line from here. This is more visible right here. I'm going to draw a trend line from here to here. It just simplifies the market for me. That is how I trade. Like, I like trend lines, I like zones. It just simplified the market. So now we can see nothing I can add. I can still add something here too. I can add a trend line from here as well to here, just to show the market is currently on a down move. So now that you can see how I do the trend line, what is it giving me? It's giving me more of like, so during this trend line right now, just give me and what I think I need next, which means right now the shape of this trend line is giving me something like an impulse right here, a correction of more of like a descending, sorry, an ascending triangle, ascending triangle pattern. I'm gonna do a full video on chart pattern and candlestick later on, but if you watch one of my videos, I know I've explained about chart pattern and candlesticks, and I went into details as much as I can, but I'm going to do a full dedicated video on that later on. And now, what is an ascending pattern? It's possibly a reversal pattern. And now that we broke through this trend line right here, I'm still seeing more of a sell on EU rather than a buy. And you can see how this trend line just simplified for me. Assuming there was no trend line, there was no key zone, I will be confused on, okay, this is too broad. What am I looking at? But now that the trend line is there, the zone is there, it just narrowed down your search. I hope this makes sense, guys. I hope I'm not confusing you guys. So you can see how trend line and zone can actually simplify your chart when you are drawing the chart. So now it's just giving me more of a broader look in a narrow look. And the more narrow it is, the more the more you'll be able to clarify what you want. It's more clear. The clarity shows. So now I'm going to go to the daily time frame and see, now that we are in the daily time frame, what are we looking at? Am I seeing anything right here? Yes, I am. On the daily time frame right here, based on this current price action, I can definitely draw another trend line. And the trend line just makes it so easy, and I'm repeating it because I know it just simplifies it. You just have to continue to practice the trend line and the zone for you to know. So using the zone right now, this trend line right now knows if I break this trend line, if I come back to retest around this trend line, the next push will probably be my next trend line, to be honest. So you can see how the trend line really helps. So now that we can see, like, okay, now I'm in a daily time frame, can I do any other thing around this area right here? Yes, I can. I know there is a zone here already, but I can draw a mini zone right here based on this current one. This current, I'm just going to change the color maybe to like blue right now. Let me change it to like green right here. So those are like going to just add more confluences to what you are doing. That, okay, there's a key zone around this area based on the daily time frame, which we might be looking for, which we have to put that into consideration as well. So now I'm going to go to the 4-hour time frame right now and see what am I looking for around here. Now that we can see around this area right here, I can certainly draw another trend line here just to simplify this market for me. I can certainly draw one here to here. This draw line is perfect here. So now based on this, my trend line right here, right? I see a possibility of it pushing up to this level right here. Then when we get to this level, we determine if we're going to continue to push to the upside. If I see a break of trend line here, retest here, then we're going to continue to the next one. Can you see how trend line just simplifies it for you? You just make things much more easier for you. I hope you're understanding where I'm coming from when I say that you can make your chart as simple as you can, and you can actually use this price action analysis. This is just pure price action, pure market structure to be able to analyze any trade. To be honest, you can analyze any financial market just using this method, simple method. But like I said, as time goes on, I'm going to teach you more things you can actually add as a confluence to just give you more boost when taking a trade, because sometimes trend line and zone is not just the only thing. The more confluence, like I mentioned beginning, the more confluence you have, the better chances you get at winning that trade. So now I'm going to go to my 3 hours and say, what am I looking for right now? What am I looking for? I still see it pushing to the upside based on my 3-hour time frame. I didn't see anything much different from my 3 hour to 4 hours time frame, so I'm not going to do anything to that. I'm not going to go to my 2-hour time frame. So my 2-hour time frame, I can see that my 2-hour time frame is looking more of a bullish right now rather than a bearish. And now what am I going to do on this my 2-hour time frame? There is a key zone right here that I can draw. You can see this key zone right here that I can draw that shows me there's a possibility we might start pushing to the upside here. Meaning, like I said before, we saw this break of trend line, right? Break of zone, I mean, came back to retest, and now we are pushing to the upside. Let's see what happened next. We see right here, this break of structure right here. How do we know market is going bearish and bullish? For those, like I said, this is a beginner friendly video, so there are some things I'm just going to simplify as much as I can. For a bullish move, for a bullish or a buy move, we call it bullish or a buy move / up direction. What we see is something like this for us to know the direction is bullish, meaning we are seeing a higher high and higher low and higher high, higher low, higher low, higher high, higher high. So this particular trend right now comprises of a bull direction. So when you are saying something like this, it means we are on a bull move. Bull move means bullish, bullish means buy, buy means up. Everything is the same terminology, but in trading we just use buy for bullish for those that are new to trading and don't know what that means. So now let me use another terminology for sell. Sell is called bearish, sell, or a downtrend. So for trading, bearish is called a downtrend. That is the terminology we use. How do we identify a downtrend? This is how we identify a downtrend, right? Meaning we are seeing a lower low, a lower low, a lower low, a lower low, a lower high, a lower high, a lower high, a lower high. For those that does not understand me, I mean a lower high, which is the LH, a lower low, which is the LL. That is that mean. I know the other one I didn't say it. The for bullish is HL and HH, which means higher low, higher high. Right there. So this right here, it is what we see as a downtrend. So whenever we are saying something like this, that means a downtrend, and that is how we look for, oh, now we are in a bullish move, now it's now turning to a downtrend, just because of the higher high, the lower low, the lower high, the higher low, the lower low. That is how we know. For just beginners that don't know anything about trading, that is just a quick explanation on that. And there's one more thing, just so I won't forget, there's one more thing called a ranging market. I'm going to explain more in details on that, but these are just a few touches since I'm remembering it right now. Let me just put it there, and later on I can make a full analysis on it for those that does not really understand it. For a ranging market is something that ranges sideways, meaning there is no trend. A ranging market, let's see, a ranging market has no trend. It's mostly moving sideways. So we just practically just move sideways. It's not moving up, it's not moving down, it's just particular in a zone and moving around that area. Hope that is helpful, guys. So now let's go back to analysis and what we are looking for next, right? What I'm looking for next is, now I said we have the breakout zone. Like I said, we have the breakout zone. We come back to retest, and then we're now pushing to the upside. Let me go to a smaller time frame just to see if I'm seeing anything right now. I can see that I have right around here, I can see a reversal chart pattern around here, which is a W or a double bottom pattern, which is a reversal pattern. So that is one thought I'm seeing right here. And some people can actually call this a reversal end and shoulder, to be honest. You can see here, you can see here, you can see here, you can see here. Sometimes it's not always perfect, but or you can call it a reversal head and shoulder chart pattern. So now that I'm seeing this right now, you just have to train your eyes to see them. And how do you train your eyes to see them? I know this sounds so cliche, but practice. Practice, practice, practice. Many times in the chat will make you see them more clearly. For those that does not really know much about trading, please just practice. So for seeing this as an head and shoulder, just means your head and your shoulders. Your shoulders, we have the left shoulders, we have the right shoulders, and this is the head. That is why they call it head and shoulders. And we can see that around this head and shoulders, there is this neck. This is the neck. There is this neck right there. We came to retest the neck and we're pushing to the upside. So on Euro USD right now, I still see more of an uptrend on Euro USD rather than a downtrend at this price market. Now I'm now in a 45-minute time frame. What am I seeing on 45-minute time frame? I can actually draw something now on the 45-minute time frame. There's a touch here, there's a touch here. Now it simplifies for me that even despite the fact that you see why top-down analysis is important, right? When I was in the monthly time frame, we can see the overall market is in downtrend, but that does not mean we can actually always sell at that moment, even despite the fact that we're in the downtrend. Because I'm an intraday trader, I can buy and I can sell. There can be a main trend that is a buy, even whether despite the fact that overall we are on a downtrend, but there are still profits that can be made going up too. So it just depends on how many pips you want. And I'm in that day trader. So I can, in a overall downtrend move, I can actually still buy. But the overall picture has to be buy. My 4 hours, my 1 hour, my daily time frame to my 4 hours has to be showing me buy before I buy. Despite the fact that you can see that monthly time frame is showing sell. So that is why top-down analysis is really important. I know overall we are on a downtrend until otherwise happen, but because I am an intraday trader, I can buy within that sell and I can sell within that sell. I hope that is not confusing, guys. So now I'll go to the 30 minutes time frame. Now I'm in the 30 minutes time frame. What can I do in the 30 minutes time frame based on this current price action? I can draw a counter trend line right here. So right now, if you come down here to retest this trend line and continue to the upside, it's just giving me more confluence that we are pushing to the that we are pushing to the upside, because we can see that this trend line right here, this beautiful candle broke this trend line. And now I think it might retest a little bit based on this candlestick that I'm seeing. I'm seeing this inverted armor, so there's a possibility we might push down a little bit. So now if you push down right here and I'm seeing weak rejection and later it's an engulfing candle right here, that's a confluence that, okay, we broke the trend line. That is one confluence. Another confluence is we came down to retest the trend line and we see an engulfing candle right here. That is another confluence for me to trade. And now another confluence is we are at the third touch of a trend line. First touch right here, second touch right here, a possible third touch right here angle. So to have confluency, you don't have to have way too much. 3 or more confluences are fine. So that is 3 confluences for me to take the trade still to buy if it plays out the way I think it to play out. And that is why you see how this breaking this down just simplifies compared to coming from the monthly time frame to the daily time frame to the 1 hour to the 4-hour time frame to the monthly time frame to the minutes time frame. You see, the more you break it down, it just makes sense. I really hope this is insightful and it's not confusing, especially to beginners that doesn't know much. And if you enjoyed this video, when you watch it and you gain 1 or 2 things from it, please don't forget to leave that comment down there. Comment and say you really enjoy it, because it makes me happy that at least I passed knowledge to people. And whatever you understand about it, just write it there. Let's interact down in the chat box. So now if you go to the 15-minute time frame, we can see the 15-minute time frame. Is there anything we are seeing in the 15-minute time frame that can be significant? To be honest, nothing. It still looks so much like the 30 minutes time frame. Now I said because sometimes I take my entries at 5 minutes. Not everybody do that, but I do. But as a beginner, I would not really advise that, because it can be so confusing and it can make you risk a lot, because if you don't really understand the way it works, it might be confusing. So I wouldn't advise that. I think I will just stick for you to stick to at least the minimum you should go is 15 minutes or 30-minute time frame, to be honest. So that is how I actually simplify trade, guys, and I really hope this is simple enough for you to understand. That is how you can simplify trades. Like I said, that is how you can first start trading. And like I said, as time goes on, you can add more things to it. I listed things you can add to it, just like how I trade. I trade with trend lines. I trade with zone, key level, support and resistance. I had my Fibonacci. I use chart pattern, and I use candlestick pattern. I just add them together, and that is how I practically trade. So this is a beginner friendly analysis, just to see how to start, because I know some people are just so confused on how to start. Just break it down one step at a time. It just makes it so easy. You see how easy it is? If you are just taking the trade based on the 1 month time frame we were in, we'll probably just be selling. And imagine saying, oh, I'm in a downtrend, we are selling. Why am I in a drawdown, right? It's because one time frame is totally different from 30-minute time frame. 30-minute time frame is the now money. There is something called the now money. Now money means you want to make the money at that moment. So just because you are overheld at a downtrend doesn't mean you can buy. You can buy, but you have to know when to buy in a downtrend or when to sell in a sell trend. So that is how we look at the market, guys. Simplify the market as much as you can. And like I said, trend line, support and resistance is just so beginner friendly. And I know some people don't take it so important, but to me, it's as simple and as great as it can be. It is so easy. It just, do you see how putting trend line around and doing top-down analysis and putting zone just simplifies the market and make you see the market in a more clearer picture? Because before it was so broad that you will be confused on where to start from. But now that you broke it right now, right now, based on this right now, if I was taking this right now, I'm just going to put an alert right here and see if it comes right here. I'm entering the trade. Entry point of interest. So this is my point of interest, because I said I'm an intraday trader, so I can take trade for my 30-minute time frame. So now that when we were at the bigger time frame, were you able to take trade? No, because that is way too big and way too confusing. That is way broad. But now that I'm in my 30-minute time frame, I've been able to narrow it down that I might buy. I've been able to narrow it down that this might be my certain entry. You won't get that if you don't simplify it and narrow it down. Because if you don't make it so simple and narrow down, it's so broad that you don't even know where to start from. But now that you can see, I've drawn my zones, I've drawn my trend line from different aspects. It just make it easy. And now I've been able to find a point of entry interest. Meaning, if we get to that point of interest for me and I see confluences of a buy, it's going to become a point of entry for me. From a point of interest to a point of entry. Which means I can actually enter from that trade. So that is how you can start trading, guys. Just practice this, and as time goes on, if you master this and as time goes on, you can add more things to it. But this is as simple as it can be. Just like right now, I'll just advise you to know more of a candlestick pattern and a chart pattern, and you're good to go, to be honest. Because now I know we are on a buy. Now I just need a candlestick confirmation or a chart pattern confirmation to give me 3 confluences, and I'm good to take that trade. Does it work all the time? Absolutely not. There is no 100% holy grail, but the most important thing is consistency, and continue to do as long as you've back tested and you know that this certain style work with that instrument, and you can always refine it and make. And I know as long as you are getting more experience, you will refine it to now suit you better. But starting trading, this is how you start trading, guys. And like I said, this can be used on any financial market. It doesn't have to be forex. It can be stock, it can be crypto, it can be future, it can be synthetic, it can be indices, it can be anything, to be honest, guys. As long as it has a chart, the financial market has a chart, you can chart that out and mark up your instrument and start trading. So hope you find this helpful, guys. I will do more analysis and I will do more videos like this. If you enjoy it, please put it in the comment section below. It just makes me know you guys are watching and enjoying it, so I'll be able to put more educative videos out there. And always remember that I do share my own bias analysis on the financial market I trade. Remember, no strategy is an holy grail. Also remember that you don't predict the market, you react to the market. Despite the fact that I am thinking the market is going to an uptrend, it might actually break and continue to push to the downside. That is fine. What I do is I react to that current price action. So you know that no one knows the market. The market is unpredictable. If it gets to my point of entry and it's not doing what I think I want it to do, you change your bias. That is just it. So don't be too stuck on your own bias, unless you'll be missing a lot of trade. But if you're open-minded, it just helps. So that is my thoughts, and that is how to start trading, guys. Hope you find this really informative and helpful. If you do, don't forget to subscribe, comment, like, and share, and I will see you in my next video, guys. Bye for now. Thank you for watching.